Hi, good evening. This is Farhan Nadeem Muhammad. Today I'm going to give a presentation about Frenzel Enterprises, how it's going to get into the marketing and how is the project going into the progress. So beginning with my mini case, I want to give a brief introduction and the background about what is the company and how it makes the products. So Frenzel Enterprise has brought me on board to provide consultation for their project, which involves developing magnifying screen protectors for smartphones. So basically, the thing which we are going to discuss is about the screen protectors which you use on our phones. That could be for the Android phones, that could be for iPhones or any kind of phones. So basically what is the product is doing is that they expect the new screen guards to be particularly popular with retirees in the United States, targeting the Florida and Arizona markets. They're planning a 5-year time horizon for this project. This is going to be targeting for a specific marketplace, which is going to be at Florida and Arizona, and it also has got a time span for 5 years. So what is my role going to be in this project is that I'll going to assess the projections prepared by the team and evaluate whether this venture is an option for them. So my role is to evaluate and give the results if this project is going to be successful for them. In this presentation, I will discuss important elements of their financial analysis, point out both positive and concerning aspects, and ultimately provide a formal recommendation on how they should proceed. So, my work on this project is that I need to give a detailed analysis for the projects to see whether this has a positive outcomes and if it needs something more to be improved on the particular case. So let's begin with performer income statement analysis. As we can look at the figures, we got the sales, cost of goods sold, selling and administrative, EBIT, operating income, we got depreciations, we got inherits, EBT, taxes, and net income. So looking at these figures, we can look how it went from the year one, so year two, and year three, and year four, and year five. So by looking the different years, we could know how the sales were, what are the costs of good and sold. The sales figure on the income statement begins at a $250K in year one and gradually increased to $850K by year three. So there was a significant increase from $250K to $850K by year three. However, there's a net income of negative $53K in the first year due to significant startup expenses. So during the expenses, there were more expenditures. Net income does become positive from years 2 to year 5, reaching 49K by year 5. So the overall net income was very high. So the initial losses raised some concerns as it might take longer than anticipated to recover the investments. So if the project gets into the initial losses, that may take time to get for the recovery for the investments. So now coming upon, let's have a look on what is the working capital analysis. For working capital analysis, we'll make a 5-year analysis for from year one to year five. See how the capitals were there, what are the changes we need, and what was the total investments that has been done over there. So working capital investments are also quite substantial, beginning at $63K in the year one and reaching a peak of $213 by the year three. So we can see there was a drastic increase from $63K till $213K by the year three. This emphasizes the idea that substantial initial investments are required before the significant profits can be guaranteed. So the working capital requirements corresponds to the increasing levels of sales. It is worth noting that cash flow may be strained during the years. So the cash flow which is going to be happen that could be strained in the upcoming years. So now let's see what the free cash flows and DCF analysis. So looking about the friends and enterprises, we can see that the screen guard protector, what is the free cash flow calculations that can be done from year 0 to year 5. For looking at that one, we need to see what are the equipment investments, what are the tax operational cash flow, what is free cash flow, what is the net present value, and what is the benefit cost ratio and internal rate of return. The free cash flow looks to be growing from the 2 year, indicating good amount of liquidity. So there was a significant growth in the free cash flow, which can be seen from the year 2. The net present value NPV $277K indicates there is an expectation of generating long-term value. So when we have a look on the net present value, the numbers were higher, which were indicating the generating for the long-term value. However, the low benefit cost ratio BCR of 0.337 implies that the return on each dollar invested is below average. The net present value is higher, but the benefit cost ratio is very low when compared to the net present value. On the side note, the internal rate of return, which is IRR, which is 21.5%, which can be seen at the bottom on the right side, exceeds the cost of capital at 12%, which suggests high level of return. So when the IRR is increasing more than 21.5%, which suggests us there was a high level of return. So based on this analysis, what are my recommendation on venture valuability? To sum up, it's highly probable that the project will yield profits within a span of 5 years. So looking upon the values from the cash flow and what are the net benefits, we can say that it is highly probable that the project will yield the profits within the span of 5 years. However, there are risks associated with the upfront investments and limited initial returns. You can see that the returns are very limited when compared to the upfront investments. It would be advisable to consider negotiating costs for the equipments or implementing a phased approach for entering the market. If by making these adjustments to ensure a cash flow, this opportunity could become quite appealing. So if these things are done in a proper manner and if the adjustments are made in a good way, so there is a high probability or high chance that it could make good cash flow and also could make it quite appealing. Thank you. That is the end of my project.